Hi, we'll be starting the meeting in a couple of minutes. Just waiting for a few people to join in. Thank you. Yeah, I think we can start now. Good morning, and thank you guys for joining in. I'm Yash Tanna, research analyst at ithoughtpms, and I cover the healthcare sector along with a few other sectors at ithought. Uh, so today we'll be talking about, as we know, decoding the healthcare stocks in Nifty 50, right? So yeah, let's start with it. We'll talk about healthcare sector weights in the index, currently and over the years, how it has moved. And we'll talk about, the big companies, healthcare companies, or pharma companies in the Nifty 50, and how their business characteristics, have changed probably over time, or where they're putting incremental money. So we'll discuss all that. So yeah, let's start off with it. Yeah. So this is a chart of the sectoral weights in Nifty 50, right? So as we can see, financial services is the biggest pie. So financial services, oil and gas, IT, auto, FMCG, all these are the heavyweights. If you look at the Nifty 50 index, right? Yeah. So if you see financial services, that dominates the index with a 37% weightage. Just wanted to check once, anyone from the team, if I'm audible and if the slides are visible. All right, sure. Thanks for that. Yeah. Okay, someone seems not able to view the screen. Can someone from the team check? Just a second. I think the others are able to see, sir. So, sure, maybe. Yeah. So if everything's all right. Yeah. Sure, sure. Screen is visible. Okay. All right. Thank you for that. I'll just reshare it once. I'm sorry for this. This is visible now? Yeah. Yeah. All right. So let's start. Yeah, so we saw this slide, and now we know that financial services dominates the index with a 37% weight, right? It has 12 constituents in total. The biggest of them being HDFC and ICICI Bank, right? So they are the two heavyweights in financial services as well. The next two big ones are IT and oil and gas. And in IT, Infosys and TCS are the dominating ones. And in oil and gas, Reliance Industries is the one that dominates. And if we look at healthcare, healthcare is pretty much an underweight. It's only at 3.8%. It has moved over the years, but currently it's at 3.8% and it's an underweight in the index. And if we break this 3.8% down, right, within healthcare, which are the heavyweights or how this 3.8% is arrived at. So if you look at Sun Pharma is the biggest, right, it's at 1.76%. And that's the only stock which is above 1% in the Nifty 50 in terms of healthcare. Next is Cipla, which is at 0.76. Dr. Reddy's is at 0.66 and Apollo Hospitals is at 0.63. So that the total comes to 3.81%, which is the total healthcare weightage in the index. And if we look at the top three, which is Sun Pharma, Cipla, and Dr. Reddy's, another, they are the biggest one, few biggest pharma companies in the country. So all these three are pharma companies, and Apollo Hospitals is obviously a pan-India hospital chain. Yeah. So this is a pretty interesting chart. It shows the change in weightage over the years. So I've taken the last 25 years change in weightages. If we look at 2000s, right, the dominant ones are consumer goods, IT, and oil and gas. These three were significant weightage in the index. Fast forward to 2004, I think oil and gas increased its weightage from 1921. Consumer goods and IT lost big time. They came down to 11 and 13%, right? And just keep an eye on the BFSI line. That has been increasing over the years, like constant increase. So again, that increased a bit. Coming to 2008, I think consumer goods and IT lost again. They were down to 6 and 10%. Oil and gas was again thereabouts around 19%, and BFSI that again
Yes,
increased.
one second. Your slide is not moving. You are in the first slide still. Can you repeat again?
Is the slide visible now?
Now, yeah.
Are the slides moving, Gopinath? Hello.
Yes, yes.
So the slides are moving. That's what I'm asking you.
Can you change the slide now?
Yeah, I've
On the
changed the
slide.
slide. Is it moving?
Now it's in change weightage over the years. Can
Now
you
has
move the
it changed?
slide? On the slide?
Yeah, I've changed to the other slide. Is it moving?
No.
I
Can you change slide now?
Yeah, which
Yes.
is it
Now,
composition of healthcare stocks now?
yes. Now moving. Now moving. Yeah.
Is it
Yeah.
moving on change in weightage over the years
Yes.
now?
Yes. Yes. Fine.
Sure, sure, sure.
Mm.
So sorry for this, guys. Maybe I'll repeat the last two slides. Uh, yeah. Uh, if we look at, so we saw that healthcare was at 3.8%, right? If we break healthcare down, uh, Sun Pharma is Gopinath. I think a few people are still having this issue of slides not being visible.
No, now the slide is visible. You are now in the composition of healthcare.
Right, right, right. All right, sure. So yeah, Sun Pharma is the biggest, right? With 1.76 weight. Actually, that's only one with above 1% weightage in terms of healthcare in the Nifty 50. The next is Cipla, which is at 0.76%. Dr. Reddy's is at 0.66%, and Apollo Hospitals is at 0.63%, right? So the total is 3.8%. And the top three, which is Sun, Cipla, and Dr. Reddy's, are pharma companies, India's top pharma companies. And Apollo Hospitals is a pan-India hospital chain, right? And yeah, this is the slide of change in weightage over the years. It's changing, right, Gopinath? Yeah. So consumer goods and IT are the biggest ones, yeah, are the biggest one in 2000 if you look at it. So 22 and 25%. Over 2004 and 2008, consumer goods and IT, that has decreased in weight. That has gone to 6% and 10% if we look at 2008. But keep an eye on the BFSI, right? That has gone from 10% to 19%, and that has constantly been increasing over the years. Oil and gas, if you look at it, again, till 2008, it was pretty much steady at 19-20%. 21%, and post 2008 it has been on a declining trend. Fast forward into 2016, if you look at 2016, let's look at healthcare. Healthcare has gone from 3% in 2008 to 7% in 2016, and there's a reason for this. Healthcare stocks also did well, so their weight has increased, and again BFSI has increased. That has gone to 29%. The other component that gained weightage at the sector was auto, that went from 3 to 10, right? Fast forwarding this to 2025, which is current, right? BFSI again significantly gained to 37%, right? Consumer goods and IT again declined to 7 and 12%, and oil and gas declined, but is still one of the top weightages in the Nifty 50 at 10%. Yeah, so this is just a slide explaining that. If you look at 2004, oil and gas was the heavyweight, followed by financial services and IT. 2016, financial services gained significantly. IT was the second biggest, that also gained. Healthcare was up from 4 to 8%. Since I said US generics did very well, and the top losers were consumer, oil and gas, and metals, right? And fast forward to 2025, financial services again, they gained further. IT and oil and gas lost weightage, but they are still the second and the third largest weights respectively. And healthcare was down to 3.8%. Moving on to the next slide. So if we look at since inception, right, only 12 companies have been a part of the index since inception. Out of the 50, only 12 have been steady. The others have been sort of coming in and going out, moving out of the index, right? If you look at the few big ones, HDFC, SBI, ICICI Bank, in consumer, FMCG, HUL, and ITC. Auto is Tata Motors and Bajaj Auto. Oil and gas, Reliance Industries has stayed there, right? So only 12 companies have been a part of the Nifty since inception. Now looking at the stocks. Yeah. Now looking at the stocks in healthcare, right, in Nifty 50. First, we'll come to pharma. Gopinath, slides visible? Thanks. Sir, I think, yeah, I think most of the people are able to see the slides, sir. Yeah. Coming to Sun Pharma, right, which is the biggest one in the healthcare. Uh, if we look at the geography split of Sun Pharma's business, right, India branded generics, which is the branded market or the Indian market, is 30%, 31% of the business. Next is the US formulations, which is the US, which is 32%. Emerging markets is 18%, right? Emerging markets are your Brazil and other emerging countries. Rest of the world is again 14%, and API and others is 5%. So this is broadly the split. Four major components. I think India branded, US the biggest, emerging markets, and rest of the world are the other two big ones. That's how we'll remember it for now, right? If you look how Sun is doing it in India, right? Sun is the market leader. It's the biggest player by far in the Indian market. It has 8.3% market share, and it is growing slightly above the Indian market is growing, right? But the interesting piece is the US business, how they've gone about that. So US business broadly, like we will say that US is one geography, right? But we need to see it in three different angles, or there are three components to it. One is the US generics portfolio, which is the base business. The second is the Taro generics business, which is again a generics business, but which is the Taro part of it. Taro was Sun's subsidiary for a long time, and now they acquired it fully. Uh, right? And the third, which is the most interesting one, is the fastest growing specialty segment. Right now, what is the specialty business, or why is it specialty? So specialty business is basically it's a portfolio of high value and low competition products, right? Uh, and out of which many of the products are NCEs or NBs. NCEs or NBs are basically new molecules or new entities, and they are under patent. So no competition can enter into these molecules. And this business typically does not have characteristics of a generics business, but it is more characteristics of a branded business, where there's the Sun has to generate prescriptions via doctors, via hospitals, right? So they have to go out, reach out to doctors, and that's how it works. And there's no competition in this business in the same molecule, at least. So it's patented. So it's more like a branded business rather than a generics business, even though it's US. So now if you look at Sun specialty sales, right? 5 years back, it was $400 million. Fast forward to 25, it has jumped to $1,242 million, so 1.2 billion, and it has grown at a CAGR of 25%, which is very healthy growth, right? And if we break down Sun's US sales, right, as I said, we look at it in three parts, or two parts basically: Taro and US generics is generics, and the other is specialty. If we look at 2025 estimates of Kotak, right, 46% of Sun's US sales is coming from branded or specialty products. And this is poised to increase only going forward. And if we look at 2017, only 16% of that was coming from specialty, right? And the others was base business and other opportunities. So that 16 has moved to 46, over the last 7-8 years. And this is helping them improve margins and have a more steady US top line, unlike the peers who are only doing very generic dependent work. So that is why Sun's top line is relatively more steadier, and margins are improving for Sun if you look at compared to any other player. Yeah. And if you look at Sun's branded business, so one would say that the branded business is 31%, right, which is the India business. That is pure play branded business. But if we break it down, right, as I said, so US also the specialty part, is some bit branded, right? So maybe 31% India is branded, right? Out of the 32%, 46% is again branded, which is specialty. So 15% of the overall sales again for them is a branded characteristic business. Out of emerging markets and rest of the world, so emerging markets and rest of the world are a mix of branded and tender business, right? So they will have their own brands as well, and they will opt for tenders as well. So totaling that, we have assumed probably half of that would be branded, half of that would be tender. So maybe another 16% would be a business which has characteristics of a branded business. So approximately more than 60% of Sun's business could actually be branded business, which is a very good characteristic. Right. So in conclusion, Sun's revenue and margin growth is led by a very sustainable engine of specialty business. And if you look at incremental capital allocation, we have a slide ahead. If you look at incremental capital allocation, has happened in this segment only, right? Sun is the leader in India and continues to outperform the Indian market by a slight margin. The only problem is that Sun is too big to do an M&A, right? So it has presence in across almost all therapy areas, and it's too big to do an M&A in India, right? So that's why it can not significantly outperform the Indian market, like the smaller players. Emerging markets and rest of the world, they will keep growing as the respective market, keeps on growing, and they are also introducing specialty assets in these markets. So that is, leading to growth for Sun in these specialty markets. Hence, the risk of a bad generic cycle, right? Now, we all know that US generics goes through cycles, right? There are cycles where there is intense price erosion and the players don't do well. And then there are a period like probably the last few quarters or the last 1 year where the pricing erosion has softened and the players are able to do relatively well. So Sun has basically insulated itself relatively better, right, compared to their past for this bad US generic cycle. Next, coming to Cipla. Right, so if we look at Cipla, if you look at the geography split, it is heavy on two geographies, India and US. So India is 44%, US is 27%, and Africa is another major region for them, which is 14%. Rest is emerging market Europe is 12%, and API and others is 3%. So two heavyweights, which is India and US. Right. So if you look at India, Cipla in India, right, it is the third largest company in India by market share, and it's a leader in respiratory therapy. It also ranks in top 5 in anti-infectives and urology, right? And it's also the biggest player in trade generics in India. So trade generics is another very emerging, segment in the Indian market where the medicines are not branded, but it's again a generic medicine, and yeah, that's sold as a generic medicine only. So it's a leader there. Cipla also has a strong franchise of consumer health or OTC portfolio, right? And they are improving profitability in that piece. Uh, right. If you look at Cipla's second biggest market, which is US, the sales has grown at a healthy clip. I think 18% over the last 3-5 year period. If you look at it, so a few years back, they took a very strategic call to focus on a few assets. Unlike plain vanilla generics, they took a call to focus on a few specific assets. So they will only do respiratory, complex respiratory assets, along with partnered high-value peptides in the US. And they also focused on select 505(b)(2) assets. So 505(b)(2) is basically uh, a drug which is probably under patent, but there'll be a new drug delivery system or slightly new composition, and they will challenge the patent basically. That also has a risk of litigation, but they also focus on a few 505(b)(2) assets. So it's a risky strategy, but pays off very well if done well. Right. So due to this, the reliance on commoditized generics, which is the plain vanilla generics, decreased over the last few years, and this uh, gave them relatively sustained growth over the last few years. Yeah. So as I said, right, as per their strategy, they launched a few key complex low competition assets in the US, albuterol and lanreotide. These are the two assets, that gave them significant growth over the last few years. They garnered good market share. These were very low competition products, and so the pricing is good. It's not like a commoditized generic. Is relatively better than a commoditized generic, and they garnered good market share, leading to a decreasing mix of the base business. Very important. If you look at the below chart, if you look at Cipla plus Invasion base business, right, in 2018 it was 66%. That is down to 22% now. And key launches, which are the key launches, a few like albuterol and lanreotide, that was 16% in 2018, which jumped to 57% in 2025. So again, I think the US business mix changing is one thing to look at, what Cipla has also done. And the others, again, Africa, I think they continue to outperform the market. which is another key area for them. And they are growing above the market rate in the private market at least. They've also acquired Actor Pharma, I think, 1.5 year back to strengthen their OTC presence in that region. And emerging market and Europe, I think they have again a mix of branded and tender markets, and they have partners as well. Right. So in conclusion, India is a key focus market for Cipla. There are three growth levers if you have to look at it. Branded business is one. So in branded, what they're doing is they're outgrowing the market, sure, but they're also increasing the mix of chronic therapies. Now, chronic therapies are more therapies like diabetes and cardiac and stuff versus a regular cold, cough, or a fever. Trade generics is another area where they are already the leaders and they are growing. The market itself is growing in double digits, so they are also growing in double digits. And consumer OTC business is another business where they are growing, but also increasing profitability. US, again, the strategy remains the same. They're strategically filing for more complex and limited competition products in respiratory and peptides. So these are two areas where they are filing more products. Their future pipeline also reflects the same. Coming to Dr. Reddy's. So if you look at the geography split, it's heavy on US. Almost half of the business comes from US. India is a smaller portion, 16-17%. Emerging markets is again 17%. Europe is again 10%. Europe will increase in the mix because of a recent acquisition. We'll discuss that. And API and others is close to 11%. So Dr. Reddy is heavy on US generics, right? Majority of the business comes from US generics. Over the years, Dr. Reddy's has also tried to launch complex products rather than only plain vanilla generics, but eventually the portfolio becomes more commoditized relative to other peers, right? So last few, if you look at the chart on the right, North America consistently has been a significant portion, even currently is around 45-46% of the business. So that has not changed for them. And over the last few years, if we see, Dr. Reddy's has done very well in the US. Significant portion of this good growth in the US has come from a limited competition drug called Revlimid. This drug, the most of the major players, even Cipla is doing, even Sun is doing, they all have a contract with the innovator where they will do limited supplies till FY 26-27, and post that it becomes a complete generic. So Dr. Reddy's has been a key beneficiary of Revlimid over the last few years. If we look at India growth, so over the years, Dr. Reddy's has improved India business as well. So they have done a few acquisitions as well, and they have done a few tie-ups as well. They've also done a Nestle JV. They have also tied up with Sanofi for vaccines. They've acquired Wockhardt portfolio. So they have done a few things in India, and it's still a smaller percentage of the revenue, but now they are outgrowing the IPM. If we were to see the monthly data, as we track the monthly data of IPM, right? So if we see last 2 years, MAT December 22 and MAT December 23, they were underperforming the IPM, the red line. And if you look at MAT December 24, they have outperformed the IPM. Yeah, emerging markets and EU are steady growing therapies. So if you look at emerging markets, right, Russia is a key focus geography for them. Roughly half of the sales of the emerging markets comes from Russia. One other capital allocation decision that Dr. Reddy's has taken very strongly is biosimilars, right? So they have launched partnered biosimilars in emerging markets, which is driving growth for them. And going forward, they will probably also launch their own biosimilar in the US and regulated markets, but that's some way in the medium term, right? In EU, the other bigger markets are Germany and UK, right? And as I said, the EU mix will increase going forward. So they have recently acquired the nicotine replacement therapy portfolio, which was one of our decent size acquisition for them. This is a consumer or a OTC business, right? And it aligns with their strategy where they want to grow the consumer business. So the incremental capital allocation has been on this side, which is not a very generics portfolio. Right. So in conclusion, Dr. Reddy's still remains a portfolio heavy on the US generics. Substantial growth in the US in the last few years has been one of the key reasons has been Revlimid, the limited competition drug that I spoke about, and the cash flows have been used for other M&As like the NRT portfolio. In India, they are doing acquisitions and in licensing, right, to maintain outperformance in the IPM, and they have the focus remains very high on India. EU contribution will improve going forward with the NRT portfolio, right, and drive growth going forward. Yeah, very interesting slide again. If you look at the incremental capital allocation of the three bigger pharma players, right, Sun Pharma, Cipla, this is over the last 2 or 3 years how they have put capital for growth going forward. So if you look at Sun, very clear strategy. Both the recent two big acquisitions have been in the area of specialty, where they have tried to focus on a lead drug candidate, where probably it will be in phase 2 or phase 3, usually phase 3. It will target a specific disease area, and they'll do the trials, launch the drug, and that will enhance their specialty portfolio. So the two big acquisitions, I think they paid for Concert Pharma $576 million, and the other one, Checkpoint Therapeutics, which is a very recent one, $355 million. So both in specialty. Cipla, if we see, one was in Africa, Actor Pharma, which was a consumer health company, $50 million. And the other one was, India, again, consumer health and OTC, right? They have not done any significantly bigger acquisition, Cipla. If we look at Dr. Reddy's, so they acquired the NRT portfolio in 2024. This is again OTC and branded business. That was a decent size acquisition, 5,300 crores. And apart from that, they acquired a US generics portfolio of mains. This is again generic products. This was in 2023, and they paid $90 million for that. So Sun has done it for specialty, Cipla more from a consumer OTC perspective, Dr. Reddy's OTC, and a small generics portfolio. Right. Now, if you were to look at US quarter on quarter, this is quarter on quarter, like quarters growth year on year over the last 15 quarters, right? This from FY22, last 15 quarters growth. Sun Pharma, if we see, the blue line is for Sun Pharma, has been a relatively more steady line. The growth has been anywhere between 5% to 20%. It has been a relatively more steady line. If you look at Cipla, it's slightly more volatile than Sun, right? The orange line. And if you look at Dr. Reddy's, it's a very volatile line. There'll be periods where they have done zero growth. They have gone ahead. They've again come down, and then there'll be periods where they have done a growth of 60 to 80% year on year as well. And now they've again come back to zero. So this is a very volatile sort of a growth, difficult to predict. Yeah. So Sun's growth looks more steady. Basically, it's due to the steady scale up of specialty and decreasing reliance on generics. Cipla's growth has been again due to a few key assets, lanreotide, albuterol, and even Revlimid was a part of it. And Dr. Reddy's growth was a lot of it was driven by Revlimid, and hence the significant volatility in a few quarters. Now, if you look, how has the pharma stocks, these three pharma stocks, has performed versus the Nifty, right, over the last many years? And is it possible that in few periods the pharma stocks will do well relative to the Nifty, and probably Nifty will underperform or outperform these pharma stocks? So if you look at the period from 10 to 15, right, the pharma stocks did well. If you look at Sun, Dr. Reddy's, and Cipla, all three have outperformed Nifty over that 5-year period, which is 10 to 15. There was a reason to it. US generics did well. And post that, if you look at 2016 to 2025, Nifty has been an outperformer. If you look at versus all three, there was a bad US generic cycle. Players had problems in the US, and then they pivoted the strategies as well. But all in all, the last 10 years, Nifty has done well versus the pharma players. So it is very important to understand there'll be a period where these pharma stocks can generate an alpha versus the index, and then there'll be a period where they'll have a bad cycle and it'll be difficult to generate alpha. Right. So there's the conclusion slide explaining the same. Between 10 to 15, 16, pharma stocks significantly outperform the index. US generics did very well due to patent expiries and low competition at that time. Post 15, 16, Nifty has outperformed. The environment became tougher. The buyers there, which are the PBMs, pharmacy benefit managers. They consolidated broadly. Only three bigger buyers were there. So consolidation of the buyers led to pricing pressures, and increased competition happened due to a change in the act in the US, right? And historically, US has had a very big impact on the performance, of the large pharma companies, because it constitutes a significant part, uh, right? But now the players have tried to create some sort of a niche for themselves to weather the pricing pressure cycles a little bit better versus the past. Yeah, so these are the sources for the presentation. Coming to TrueBlue, which is a large cap fund. So what's the ithought philosophy, right? Long-term focus, non-consensus investing, bottom-up approach, high focus on risk management, right? What are we trying to capture here? We're trying to capture India's growth story and also the global champions rising from the exports side. Yeah, so this is the USP of TrueBlue. It's a 100% pure large cap portfolio. There's a high active share. There's a low churn. It's more of a buy and hold strategy, and there's zero fixed fees. Yeah. So what do we look at? A great investment is basically a combination of strong fundamentals and attractive valuations. So we look at good corporate governance, a strong leadership, right, and a very good execution track record. Very important. Industry leaders, high return on capital, and zero or low leverage, which is very comfortable leverage. And the most important of one of the most important things is reasonable valuations, entry valuations. Yeah, the four pillars of TrueBlue. Yeah, so as I said, it's a complete blue chip large cap portfolio, right? Large cap stocks 25. Yeah, so BSE 500 versus TrueBlue. This is a pat, right? So if we see TrueBlue, there are 26 stocks, BSE 500 stocks. But 5% of the stocks, right, which is 26 stocks, contribute to 33% of the profit of the BSE 500, right? So 33% is TrueBlue, and rest of the 500 stocks is BSE 500. Yeah. So yeah, coming to TrueBlue Champ 1, so HDFC Bank, if we look at a 12-year track record, right, the book value is compounded at 20%, while the share price is compounded at 15% for HDFC. And it's an execution machine. As I said, we look at strong execution, right? Uh, uh, if we see every few years, the F5 profits, the full year profits are its quarterly profits. So if we see the latest quarter, Q2 of FY25, the profits were equivalent to the FY 2018 full year profits, and this is not the first time they've done that. Yeah, another example was ITC. So we started buying around June, July 21. The stock price was not doing much, but the financial performance was getting better, and they're still holding it. And eventually, the stock price caught up. There's a few financial metrics for ITC. I think if you look at the free cash flow generation, has been on an uptrend. A steady ROC, rolling PAT, 6 months rolling PAT on an increasing trend. Yeah. So here is an example of a drawdown, right? June 22 was a tough period. This is large cap funds and Nifty 50 performance versus TrueBlue performance. So if we look at Nifty 50 around that time, from the top was down 17%, whereas TrueBlue was down 12%, and the other comparative large cap funds, right, are on the slide. So TrueBlue relatively did pretty well. Another example, March 23, right, where Nifty was down around 10%, TrueBlue was down around 5%, and the other large cap funds did. Yeah. So what should be our endeavor, right? We should have an expectation of 200 basis points to 2 to 3% above the benchmark, right? And the time frame you should ideally be looking at is a 3-year rolling return. Yeah. Yeah. This is product suitability, first-time investors, family offices, institutional investors. Yeah. So investment team, I think Mr. Sham Shekhar and Mr. G.R. Balaji, who's the head of research and co-fund manager. And here's the investment, our whole investment team, apart from those two. Yeah, this is the performance as in March. The key terms. He has two options. Yeah, yeah. I think I'm done. Gopinath, we can have a few questions if any. Gopinath? Sure. Yeah, sure. So, what are your thoughts on the future of hospital sector? So, sir, I think the healthcare sector as a whole is poised for growth. We are significantly underpenetrated in terms of hospital. If you look at hospital infrastructure, we are significantly underpenetrated. Beds per 10,000, doctors per 10,000. So there's a lot of room for long-term growth. What hospital sector typically does, it goes through cycles, right? There was a cycle where all the players expanded till 2018-19, and then there was a consolidation cycle where players didn't expand, but they utilized their existing capacity or beds, so to say, and then that led to increased profitability, increasing return ratios, right? And now again, there's a lot of expansion happening. There's a lot of private equity interest in hospitals. The sole reason for that is there's long-term growth. There's a lot of underpenetration. Valuations, although in this space, are nowhere close to the lower end of the bracket. So that's the concern. But there is significant headroom for growth if you look at infrastructure or otherwise. Yeah. So why True Blue versus Solitaire? So sir, True Blue, as I said, it's a completely blue chip portfolio. It's a pure large cap portfolio versus Solitaire. It's a multi cap portfolio. We'll take small cap, mid cap bets as well. Right. Another difference is Solitaire. We don't do banking. Like we don't take banking stocks versus True Blue. There is a weightage of banking. Yeah. Will tariff affect healthcare? So tariffs as of now is as you would be reading as well. It's a very, very dynamic environment. As of now, there does not seem to be much of an impact on pharma due to the tariffs. Hospitals is anyway, it's more of a domestic play. But for pharma, what we have to understand is that 40% of the volumes of US generics that US has, right? 40% of the volumes are supplied by India. To make this whole infrastructure at the cost that India supplies and the supply chain, right? Pharma is a sector where you have to have a supply chain, you have to have the raw materials, you have to have the API, and you have to have the KSM before that as well. So it's very difficult, to make that whole supply chain. Even if they do make it, they won't be able to make it at the cost India makes it. Even if they make it, which is not possible, but even if they, let's say, make it at the cost, the regulatory hurdle is one more hurdle. It would minimum take 3 to 5 years for a facility to get the USFD to start a greenfield and get the USFD approval and stuff. So eventually, if the tariffs are applied, a lot of managements are saying that they will have to pass on because they do not. US pharma generics is not, where they make a very healthy margin. So probably if it is shared, then there'll be a hit on the margins. But a lot of them say that they will, have to pass it on. People will exit from molecules. It will have problems for the US, I feel. There'll be drug shortages. The end consumer will have to pay more. So yeah, it's an evolving situation. Yeah, so I think impact on tariffs is what I just spoke. Dr. Reddy's with the Revlimid issue is expected to underperform going forward. So is it already in the price? So sir, I would not be able to talk about if it's in the price or not in the price. One thing is for sure that post, they are a significant beneficiary of Revlimid, and hence once Revlimid goes off, they'll have a much bigger proportion to catch up versus the others. So they will have to cut costs significantly. They will have to have a portfolio that counters Revlimid, and which will be a more difficult task relative to the peers for Dr. Reddy's. So yeah, already in the price or not, I will not be able to comment on that. I'm sorry. Cipla with the impending sale due to family dynamics. Yeah, so this has been there since some time now, sir. Uh, Cipla family. As of now, what I understand is they are not looking to actively go out and sell as per the latest. But a few they have tried a few times to sell. What I believe is a right acquisition would not be so much of a problem, right? So let's say if Torrent, there was a rumor that Torrent wanted to acquire. Now Cipla was too big for Torrent to acquire. That could have its own issues, but otherwise, it's very dynamic. I mean, yeah. 5 years down the line, healthcare and pharma, how will the growth scenario be? So, as I said, right, pharma also, if you see, India is one of the fastest growing markets. We grow anywhere between 8 to 10% or even higher in a few years, but 8 to 10% is the average, which is a very healthy growing market. Another benefit of the Indian market is branded market. It's a very, there's a longevity of growth, right? You don't have to worry about the pricing pressure, filling up the portfolio again and again with newer molecules, relatively lower R&D, relatively higher return on capital once you build the brand. Uh, so the growth scenario is a much more steadier growth scenario if you compare it to other markets. It's a very good market to be in. But again, you cannot have a bigger company like Sun cannot have a 20-25% growth, right? Because it's just not possible for them to grow at double the market rate. How much does China supply to US on pharma sector? So China is also a significant supplier. China is also significant, if not, even if we leave US out of the picture, China is a significant supplier of the KSM, which is the key starting material, which is the raw material for the APIs to India, right? India is trying to reduce dependence on KSFs, like a few key ones. Aurobindo started a PNG plant. Orchid Pharma is doing a 7-ACA plant. So all these important KSM and in antibiotics we are trying to make with the PLI benefits and stuff. But still, there's a heavy reliance on China for the KSMs. So in the overall supply chain situation, China still forms a significant portion. US, if you look at US or if you look at India, eventually the formulations are supplied to the US. Also, one more interesting thing, a trend which has been happening is China has been emerging in the biotech sector. So if you look at the new filings or the new biotech molecules, right, China has also matched or even outpaced US right there. So they're doing very well in the biotech sector. Looking at the current valuations of Dr. Reddy's looks good. Yeah, I mean, I don't think I'll be able to say anything on buy or sell or anything. But see, Dr. Reddy's again, I think what the market is adjusting or what the market is resuming is that the earnings for Revlimid will not continue, right? So that has to be adjusted if you look at the valuations. Adjusting that, you have to look at the valuations. Now, the base business, there'll be a significant drop in FY27, right? Then the valuations will catch up. So that is the adjustment that has been going on in Dr. Reddy's. So you cannot just look at current valuations, in my opinion. Your view on MNC pharma companies? Yeah, MNC pharma companies, I think very steady growth in India. One thing is that MNC pharma companies, the top directive of new launches or growth, or how the strategy is comes from the parent. So it's controlled by the parent in that way. But other than that, it's a very steady return on capital business, good growth, decent margins, steady margins. So yeah, entry valuations, if they are lucrative, MNC pharma is very good. Any other questions? Sorry, I didn't get your question. What do you mean by slimming tablets? Slimming, are you referring to the GLP-1 opportunity, the bigger, I mean, the weight loss and obesity and stuff? Is that what you're referring to? Yeah. So yes. I think most of the big pharma will be going for it. Uh, the interesting thing is, so Dr. Ed is one of the levers for them to offset Revlimid is a strong foray into GLP-1. They'll be hopefully they'll be one of the first ones in Canada market where the patent is expiring first for semaglutide. And Brazil, I think, is the another market. US is patent is expiring later, I think 2032, if I'm not wrong. But yes, they will be generic entry. Even Sun probably, even Cipla will probably do the generic entry for all these all these GLP-1 molecules. Apart from this, Sun is working on its own GLP-1 product. They are doing trials. So this will be an innovative molecule. It will not be a generic, but that is still some time away. They're still, I think, into phase trials, and that will take time. But yes, these companies will be involved in the GLP-1 category because it's a huge opportunity. If you see the sales of semaglutide, right, tirzepatide and all, it's, I think, close to more than 20 billion. Yeah, and it's projected to go to 70 billion. So yeah, the other companies are Biocon as well. I think they're the first ones to enter the UK market with liraglutide, which is already off patent. So and they will launch in the US as well. So that they are the other front runners for that. What is Dr. Reddy Nestle JV? Yeah, so Dr. Reddy is tied up with Nestle for a few consumer products. They will launch it in India. So it will come from the parent. It will be consumer OTC sort of a business. It will be a slow and steady scale up. Won't be a hockey stick jump, but more towards growth of the India business. Yeah. So thank you so much. Thank you. Hoped it was helpful and had some takeaways. Yeah, thank you, sir. Thank you, sir. I'm glad it was helpful. Any further questions? Stop sharing presentation. Is the GLP-1 sales taken? So the GLP-1, so we have not given any forward-looking projections, right? Like I'm not even the forward-looking projections that I have put in the presentation is of Kotak. I have not put any of my forward-looking in my research and analysis. Obviously, I do take you know what impact this could have on these potential companies since they probably would be in the portfolio as well. So obviously we do take that into consideration, but in the presentation, I don't think I've put anything except for the Kotak estimates. and I think that's mentioned in the data sources. Yeah, many times. Sure. So drugs coming off patent, right, is a trend. It always happens. The only issue now, right, is that you have to sort of see how the pricing or the pricing pressure cycle in the US is playing out, which is extremely difficult to foresight maybe 2 3 years down the line, because that's not even what the pharma companies know how it is going to play out. And that's what happened, right, in post 21 22. There was a significant pricing pressure. People actually dropped out. Companies dropped out of molecules because those molecules were making losses. They were not able to even generate cost of capital, or even lower than that. They were making losses. So then people exited molecules, then there became drug shortages, then pricing becomes better. So it's a cycle. Now, sure, drugs will go off patent. Companies, as per their strategies, will target a few molecules. Like, for example, let's say Cipla, they will, if there are a few respiratory drugs going off patent, they will target those off patent drugs, and they'll try to be first in the market. They'll try to be when the competition is low, the pricing is better, they'll try to get a good market share. So like that, there will be companies that will benefit out of these opportunities. But as a whole, I feel we should keep an eye definitely on the pricing pressure environment in the US, because that's what eventually determines how the whole portfolio. Now, if your whole portfolio is deteriorating in double digits, what was happening in 22 or 23, the whole portfolio, like if you say, if you had sales of 100 crores, that was probably deteriorating by 12 15%. So that became 85 the next year. So you, for growth, you would need 15 rupees plus sales, that would just be equal, and then plus 15 to show a growth of 15%. So that's a significant amount of growth that you need to show for growth. So the pricing cycle determines a lot in the US business, and hence so if you see Sun, they have created this specialty division, and they are growing that, which is more steady. They will not have this problem in that specialty division. I'm talking about Cipla again. In the few molecules, unless they go off patent, they will not have this problem. They'll have more problem than Sun because they are off patent molecules, but relatively lower. Versus someone like a Unichem or Aurobindo or an Alchem, which have very plain vanilla generics portfolio. I mean, there'll be significant competition when they file for the product. Even they will not know how many people are going to come in that molecule. I hope that answers the question. And another trend I would like to highlight that is happening in the market, right? So there are two types of drugs. One is small molecules, which are which are the pills or the things that we take, and the other is large molecules, which are biologics, right? Which are mostly injections and stuff. Right now, so biosimilars are picking up in a big way. This is a global trend, and more off-patent drugs that are going to happen in the next 10 years. It will be more for biosimilars rather than or biologics rather than small molecules. And there are a few key players that are focusing on that as well uh, to tap that opportunity. That answers the question. Any other questions, guys? Yeah, so I think biosimilars, there are a few players who are looking at biosimilars. The leading ones can be Biocon, their subsidiary Biocon Biologics. They're one of the leading players from the country, from India. They're doing their own biosimilars. They have their own front end now as well with the Viatris acquisition. So that's, I would say, one of the leading companies. Other than that, partnered assets, a lot of people are doing. Dr. Reddy's is doing. Aurobindo is also doing. Alchem also has a subsidiary called Enzene, where they're focusing on biosimilars, but that's more India emerging markets. And now they've set up a facility in the US. for contract manufacturing. Sun has not taken a strong call on capital allocation on biosimilars because they already have their own specialty engine. These are the few players that are pursuing biosimilars. Biosimilars in itself is a very difficult business to be in. It will have a few characteristics like the generics, which is erosion, competition, not as much as generics, but it will have that characteristic. Whereas on the other hand, manufacturing is significantly more expensive versus a generic drug. It's more regulatory and financially more difficult than a generic drug. Sure. So Indian biosimilar companies, right? So if we look at, we are still very small. I think, as I said, probably Biocon is the only one who has a significant pipeline of biosimilars and in market biosimilars in regulated markets. So they are the only company right now. And it's small when you compare it to the larger peers, the foreign peers. Uh, and they are competing with them. One cost advantage that we inherently have is the geography that we operate in. So the cost structures are relatively leaner. Uh, Apart from that, the difficult part of it is marketing and getting market share, because the larger companies will already have a significant sales force. They will also have a portfolio, a significantly larger portfolio. So and access to buyers, hospitals, PBMs is another thing that they'll have an advantage on. Uh, but yeah, I think if you have an integrated model, probably you are better off versus partner model. But there are pros and cons to it. Uh, Having a partner divides the risk. So so it's a still evolving situation for Indian biosimilar companies. It's not very clear. Even the regulations in the US are evolving with respect to interchangeability and stuff. But yeah, it's a very capital intensive business for sure. Hope that answers your question. Sure. Thank you. Sure. I think we close the session. Thank you again, everyone, for joining. I hope this was a useful session for you guys, and it was a very good discussion for me as well. So thank you.